Onto our last, but no means least speaker, Michael Goldsworthy, who is the managing director and founder of Silex Systems, which is yeah, a little bit different from some of the other presenters we've had. Silex is obviously developing their laser enrichment technology in collaboration with Cameco via the GLE joint venture. And this has the potential to be absolutely game-changing for the nuclear industry. This is what you'd call the third or even fourth generation enrichment technology that would, as Michael and his team proved this up, will virtually replace and make redundant the centrifuge technology of yesteryear, which hasn't really changed for many decades and is dominated by the Russians. So we're in a point now where Michael's running some pilot plant trials in the US. The market's waiting with bated breath to see the results of those trials and see how the technology proves up. And I think that is probably the single biggest thing in the investor base in Silex is looking for, is just to prove up that this technology works at scale and is as game changing as we think it is. So over to you. Hopefully you'll share some slides with us and take us through the latest Silex update. Thank you, Mike. Are you with us, Mike? I think Mike's frozen screen, or is it me that's frozen?
Can you hear me?
Gotcha, Mike. There we go.
And can you see?
I can see you, yes.
Look, I'm just going to throw the slides up and provide a brief update. And thanks for the opportunity to talk again in the conference. Okay, can we see that now?
Absolutely.
Do you have, yeah, there we go. Right, so we're going to talk about uranium today being the theme of the conference. There is also a project in silicon enrichment that we're undertaking for silicon quantum computing, and also an application in conventional silicon chips. And then also a third project in medical isotope separation for principally new cancer treatments. So basically try to extract maximum value and opportunity from our Silex enrichment technology. Recent highlights, our subsidiary joint venture, GLE, Global Laser Enrichment, 51% owned by Silex, 49% Cameco, jointly controlled joint venture, continuing to accelerate activities under the 2024 plan and budget for our technology demonstration project in Wilmington, North Carolina, aiming to complete that at the end of this year. Also recently, GLE opened a new facility across the Cape Fear River from the test loop facility. That's now headquarters with quite a large area allocated to a commercial team and a pre-construction and preparation team, and also extra space for manufacturing for future equipment. So that facility is now open. Other events recently, we've seen the Russian Prohibition Act passed by US Congress. We've seen the other tranche of funding come through in the Nuclear Fuel Security Act, $2.7 billion of funding that was subject of a DOE RFP, and GLE has submitted a bid for that RFP on the 9th of September. And also in the middle of this year, entering a series of agreements that provides GLE with an option to purchase land next to the legacy DOE first generation gas diffusion plant in Paducah, Kentucky, for the planned Paducah Laser Enrichment Facility. Just quickly on silicon, we're building the first production module for enriched silicon at our Lucas Heights facility here in Sydney, and that's with the support of about $5 million federal funding under the Defence Trailblazer program, and a further $4.5 million odd for a contribution from silicon quantum computing at UNSW. That's progressing quite well. We have to have that in production sometime next year. Medical isotopes, we're in stage 2. That's technology validation for the process to enrich our first target isotope of ytterbium-176, which is the precursor to produce what we call lutetium-177 radioisotope, which is now authorised for use in the US, UK and Europe for advanced prostate cancer. As far as the balance sheet goes, we've got $113 million in cash at the end of June with no corporate debt. So on to uranium. We're seeing the bifurcation of the industry that we've heard about today. We are working with GLE quite feverishly with the pilot demonstration underway in Wilmington, North Carolina. Currently ticking up to around $500 million of investment over the last 15, 20 years, although, as we all know, the years after Fukushima, we had to mothball our plans as well, our plant and plans. So racing ahead now in Wilmington, North Carolina, the key demonstration, as I mentioned, hoping to complete by the end of this year. If that all goes to plan, then GLE will be positioning itself to address what we call the triple opportunity that has emerged in the nuclear fuel supply chain, principally since the Russian invasion of Ukraine. And the first opportunity is the production of natural grade UF6 from legacy DOE tails inventories held at their Paducah plant. And that will support the rising demand for uranium and conversion services. The second opportunity being production of low enriched uranium, LEU. That's the fuel for today's existing reactor fleet and hopefully helps mitigate supply risks for LEU as well. And thirdly, the production of high assay LEU. That's the fuel for next generation advanced reactors, including small modular reactors. The nuclear fuel supply chain today, uranium production, which I've heard a lot about today, is the first step principally from mining, but we will be producing natural grade uranium from those legacy tails. That takes us through uranium production and conversion. The conversion from oxide to fluoride is conventionally the second step of the supply chain. Third step is the key step of enrichment, taking it from natural grade to LEU or higher. And fourth step being fuel fabrication. So in light of 20 years or more of Western supply chain neglect, underinvestment, we've seen quite a bit of influence from the Russian sourced nuclear fuel via Rosatom, 10X and others. So we have seen now the conversion industry consolidate to just 3 Western suppliers. That's Cameco, Orano and ConverDyn. Cameco, of course, our partners having their facilities in Canada, Orano in France and ConverDyn in the US, excluding Russian conversion. So in enrichment, there's only 2 Western suppliers today. That's Urenco, tripartite European, Dutch, German, British organisation. They have plants in each of those countries, plus the USA and New Mexico. Orano is the French conglomerate, so they have a large enrichment plant in France, and they recently announced plans to build a plant in Tennessee. So quite an exposure there in the absence of Russian nuclear fuel, with only 2 current Western nuclear and enriched nuclear fuel suppliers. For HALEU, there's no Western suppliers today. SMR reactor developers were relying or going to rely on Russian fuel to get their needs sorted for the first decade or so. So if we look at the situation with Russian influence in today's market, the bottom line here is enrichment. Today, Russia has about 44% of global enrichment capacity with its massive resources of centrifuge machinery, and that has played out to the extent of 30% of the European Union's enriched nuclear fuel supply and around 27% of the US nuclear fuel supply. So quite a bit of influence there, which will come to an end in the US at least by the end of 2027 under that recently passed act. All this has seen prices rise. Uranium prices, as we've heard today, are still edging up after consolidating, and Andrew's predicting quite boldly that we'll see $150 a pound by the end of next year. So we're all hoping you're right, Andrew. Conversion, again, very big increase in pricing since the Russian invasion of Ukraine, sitting now just under $40 a pound, sorry, a kilogram. The different units, not our fault. And enrichment measured in separative work units today trading at about $160 or higher. That has also increased quite a bit since the late teens. So currently very favourable positions to finish our pilot demonstration in Wilmington, North Carolina. That all goes to plan. We're hoping that we can start commercial operations later this decade, 2030 timeframe. In concert with that, we have seen quite a bit of support come from the US government and industry. Just to recap, the Inflation Reduction Act, which was passed in August 22, saw $700 million of government funding come to the Department of Energy, principally for high assay LEU production. There is a $100 million bucket of that funding which GLE is focused on. That's been allocated to support novel nuclear fuel technologies. So we'll hear more about that in the coming months. The Nuclear Fuel Security Act, which was passed by Congress in December last year, brings another $2.7 billion of US government funding through the Department of Energy. That RFP, as everyone is aware, was issued in July, and GLE submitted its bid on the deadline of 9th of September. So we will hear some news on that over the coming months as well. And the Russian import ban was passed in May, and that took effect in August. There are waivers available until the end of 2027. We've also got, GLE has signed letters of intent with 4 US utilities, Constellation Energy, Duke, Dominion, and another utility. They are all very keen to see GLE succeed, and those letters of intent will hopefully translate into meaningful support of one form or another as GLE moves towards market. The timeline shown on this slide has a little more detail than previously shown. So right now we're looking at the TRL-6 technology readiness level is scale used by Department of Energy, NASA, Boeing, all these big companies that bring new technologies to market. TRL-6 is very important. It's the pilot, full pilot scale demonstration of technology. So this is our pilot plant demonstration progressing in Wilmington, North Carolina, and then as we move past that into 25, 26, 27, looking at the higher TRL levels 7 and 8, which are essentially building out full-scale equipment in a real environment that is a full cascade type plant. And eventually TRL 9 is operating your first plant. And alongside that, we have what is called manufacturing readiness levels that replicate that type of progression of the technology from a manufacturing perspective. And as I noted before, there is quite a bit of space allocated in the new GLE facility in Wilmington for the manufacturing activities that will be undertaken in-house. In parallel, US Nuclear Regulatory Commission license must be obtained for the Paducah Laser Enrichment Facility. That is underway. The application is being drafted as we speak. The plan is to submit that application to the NRC middle of next year, and then they will take a couple of years or so to process that assessment with the normal process of backwards and forwards. And hopefully 2 years or so down the track, we will have that license for the PLEF facility. In the next couple of years, there will likely be a PLEF feasibility assessment that will result in something like an FID, a final investment decision. That feasibility assessment is important for the shareholders, Silex and Cameco, to size the opportunity and make sure the economics underpin that investment. So then we move to engineering, procurement, construction through the second half of this decade. Already some early activities with the site planning and characterisation, principally relating to the licence application, but engineering, procurement, and construction will unfold in that sort of timeline, market conditions permitting, and then finally moving through to commencement of commercial operations later this decade. So quite a bit of activity on the horizon, and yeah, lots of things happening over the next few years, but even over the next 6 to 12 months as we move that program forward. The triple opportunity, just to dive a bit deeper. First opportunity, as I mentioned, is processing the depleted DOE tails, legacy tails that are stored at their legacy diffusion site in Paducah. The plan is to produce around 2,000 metric tonnes of natural grade UF6 from those depleted tails. And if you equate that to a mining operation, that would be around 5 million pounds of uranium production a year for 30 years. There's about, over 200,000 tonnes of that material, and that will take around that 30-year timeline to process at 5 million pounds a year. Along with that, we do get the value of the conversion. Our feed is already converted, so that's a bit of a bonus there. Second opportunity is to produce low enriched uranium. That's moving from natural grade of 0.7% 235 uranium to around 3 to 5% assay. And the utilities are starting to ask for a slightly higher grade of fuel. We call that LEU plus, which is assays of around 5 to maybe up to 10%. So that's in early stages of development. The utilities are saying that will help their economics. And then the third opportunity is producing the high assay LEU for the next generation small modular reactors. This is a schematic, conceptual a plan of what the multi-purpose Paducah laser enrichment facility might look like in time. The first opportunity is the central blue building. That's the production of natural grade uranium hexafluoride from the depleted tails, which sits in the diffusion plant yards, shown at the top left-hand corner of this picture. So the site that we're talking about for GLE is adjacent to that DOE site. So processing and producing around 2,000 metric tonnes or 5 million pounds a year of natural grade uranium, which could then potentially be processed in a sister factory next door in the grey building, producing LEU, low enriched uranium. And of course, this is measured in separative work units, and then potential to expand the LEU production quite significantly over time if market conditions persist or sustain to perhaps many millions of SWU in the left-hand building and the right-hand building. And then the third opportunity for production of high assay LEU, shown represented in the green building out the back there. So quite an exciting plan. Looking at the first opportunity alone from an economic point of view, we've done quite a bit of modelling on the costs, quite a lot of detail into the engineering model, the cost model, the economic model, and based on our current estimates, all-in costs, that's OPEX, CAPEX, sustaining CAPEX, payments to the DOE for the feed material, and also payments from GLE to Silex. There is a technology license, which I'll come to in a minute, that carries royalties. So that's all embedded in our current cost estimate of less than $30 a pound, equivalent to producing from a mining perspective. So quite a resource, equivalent to 150 million pound contained resource, all above ground and waiting for GLE in cylinders in the DOE yards. Not to be overlooked is the value of the conversion that is contained in those depleted tails inventories. It's stored as UF6. It came out of the back door of that first generation DOE diffusion plant. So that will contribute around 2 million kilograms of conversion value a year, along with the 5 million pounds of uranium. So at nearly $40 a kilogram, there's $80 million of conversion value wrapped up in the production of that natural UF6 in the blue building that I showed in the last slide. And then potential for further upgrade to LEU Plus and HALEU. So looking at the value proposition, we effectively have two bites of the cherry, if you like. One or firstly through our equity in GLE, which today currently we hold 51% equity and Cameco 49%. When we restructured GLE with Cameco back in 2019, 2020, we negotiated an option with Cameco that gives them the call at fair market value to acquire another 26% of GLE. The window for that option opened in February last year and is open for roughly another 3 years. So plenty of time there. A lot of speculation around that option. Currently, we have an embargo. We have a confidentiality agreement on the details and discussions of that option. So I can't really comment any further on that. We therefore have a significant equity stake in GLE, whether it be 51% or 25%. We will have a significant stake in GLE and that triple opportunity. And then over and above that, the license for the Silex technology, which has been in place since 2006 with GLE. GLE is the exclusive licensee of the Silex technology for uranium enrichment. That carries a royalty of at least 7% of GLE's enrichment SWU revenues. And there is a sliding scale upwards there that's relating to reduction in capital costs over time. Bit of detail there that we don't have time for today, but basically if we base the royalty on the minimum 7% and say 8 million units of operations sometime in the future, that would be the blue building and the first grey building on the left operating for 8 million SWUs of capacity. That would bring in today's enrichment price of $160 a unit of around $80 million a year in royalties. So the royalty stream for the Silex technology license is not to be underestimated in economic calculations. So there we go, two bites of the cherry. Quite an exciting future for GLE. The market opportunities that have opened up on top of the original project for production of natural grade uranium from depleted tails, now to replace Russian capacity and also supply growing demand for nuclear fuel over the coming decades. We can't forget the organic growth in nuclear, not just replacing Russian imported fuel. So quite an opportunity there for GLE and the Silex technology. So just to wrap up, our path to market, GLE's path to market, underpinned by that Paducah project to produce natural grade UF6 by virtue of the agreement with the US Department of Energy and the feed materials. Triple opportunity adds the LEU, LEU Plus and HALEU components for nuclear fuel, and accelerating our efforts with GLE since the beginning of last year. And now starting to work on other key commercialisation efforts, including the license, site acquisition, and preliminary manufacturing setup activities. So our technology gives quite a unique leverage into the nuclear fuel supply chain, not just uranium, but also conversion and enrichment. I don't think you'll find that anywhere else on the radar. So quite a unique value proposition there. In addition, those potential royalty flows down the track. And then just to mention again, the Silicon project now moving towards first production sometime later next year, and then also working on some breakthrough technology for medical isotope production. So that's my update for today, Andrew. I'll just pause there and see if there's any questions.
Yeah, fantastic. Look, great update, Michael. Thank you so much. Just diving a little bit further deeper into the pilot demonstration plant. You're saying that you're aiming for that to be completed by the end of this. Can you just give us what stage are we up to there now? Do we have live feed going into the test loop facility? Are we actually separating the isotopes at the moment?
So the last disclosure was that we have largely finished commissioning, and we had loaded the UF6 into the test loop facility. I can't really disclose anything more than that at this point, but at this point in time, we're still aiming at completing the demonstration by the end of this year. The demonstration will be assessed by an independent contractor that has been engaged by GLE, a top-tier engineering firm that is familiar with the technology. They've reviewed the technology several times over the years, and they will be coming in to assess the results of the pilot plant demonstration later this year as we move through that testing. The ultimate endpoint will be a report that the independent consultant will compile and then submit to owners Silex and Cameco on the results of the TRL6 demonstration. We estimate that will take 3 to 6 months. So we don't control that. That's up to the engineering consultant, but that's the plan at this point.
Okay, so the declaration, if you like, of TRL6 won't occur until after that report's in and reviewed. So the point when TRL6 is actually declared maybe middle of next year? I'm
not saying that. I'm saying we will be starting. Well, we've loaded the UF6. We are undertaking the testing through the balance of this year. The independent consultant will come in and start assessing the testing before it's concluded, and they will tell us when enough testing has been done. We estimate that'll take 3 to 6 months.
Okay, understood. All right, got it. All right, well, that's great, Michael. Obviously, we're all waiting to hear the results of that, and that's obviously going to be a massive milestone for the company and for the technology to have that TRL6 declared. And I think there's a lot of people sitting back watching and waiting for that key event. So, good luck in the next few weeks and months around that, and we look forward to the updates when you can provide them.
Thanks, Andrew.
Excellent. All right. Look, that wraps up our conference for today. Apologies, we ran a little bit over the original scheduled time, but I think you'll all agree that was worth it. That was an incredible run through from a whole bunch of interesting companies in a sector that is clearly, it's had the first wave of what I call the nuclear renaissance has come through in the last 2 or 3 years. There is another bigger wave coming. And for those of you who are looking for investments in the uranium space and think you missed the run, I think there's a lot more still to come. And in fact, it's a little bit frustrating for those who've been following it for a while. Indeed, the pullback in equity prices in the last 3 or 4 months has probably given everybody another opportunity that you don't often get to see. So, for those generalist fund managers and for retail investors who don't follow the sector as closely, make sure you don't miss this next wave. So, get on board. A whole bunch of companies there that are worth taking a look at. Obviously, reach out to your Shaw and Partners advisor if you want to get access to our research, and happy to provide commentary where we can. So thank you everyone for joining us. Thank you to all our speakers. Terrific run through, and we will be back again hopefully in another 6 months and do it all again. That wraps up the 6th Shaw Uranium Conference.